Hello everyone, welcome to the part 3 of chapter 3, that is double entry bookkeeping following Kaplan Study Textbook. Before we start, don't forget to subscribe this channel ACCA by Rida and hit the bell icon to never miss any updates. So in our last video we already understand the credit topic, and today we will understand the formats of sales and purchases daybook. So this is the format of sales daybook, which is almost similar to the purchases daybook, just there is a difference of there is a customer name, and in the purchase daybook there is a supplier's name, right? And the formats are almost same. As you can see here, there is a date mentioned, right? Then there is an invoice number. What are the invoice number? The bills that we have generated, the bills we have given to the customer, in which there is a time limit, there is a credit period mentioned, right? And then there is a ledger reference. Ledger reference are those references like each and every customer has their separate ledger accounts, and those accounts have the reference number which are going to be mentioned here. Then the balances of those ledger will be one by one mentioned with their names, and the total amount is here. And then what it says, the total sales for the day of $20,200 will be entered into the accounting ledgers in the double entry format. So what is the double entry format? As we know that our account receivables are 20,200, so we will record it as account receivables debit 20,200, and then sales is our revenue income, and whenever the income increase, it shows on the credit side, right? So these are the receivables that we have to we have to collect that money in future dates. Now in the purchases table, same as I already mentioned, the supplier name will be, there is a difference of supplier and the customer name, and all the format is same. So after all of these amounts, we get the balance of 8,615, and we will record it in double entry format, like, so we have purchased, right? Purchases, right? We have purchased on account. This is our expense, and whenever the expense increase, it shows on the debit side. 8,615 is our purchases, and we have to pay it in the future date, right? So account payable. So account payable is the liability. Whenever the liability increases, it shows on the credit side, that is 8,615, right? This is the double entry format, right? Now what happens in sales return and purchase return daybook? There are whatever the goods are received by the customer, or for some reasons the customer has given that goods back for any reason, so that is our sales return daybook. And then our account receivable account decreases, and the goods are back, our asset is back, the asset will increase, right? And the opposite side for the purchases, whenever we purchase on account, and for some reason we don't like the good, or any other reason, we give back to the supplier, so they will give us our money back, right? expense would be decreased and it will show on the credit side, right? So here, as you can see, there is an illustration 1 of this chapter. You will just understand what the question says. Mr. Kipperling runs a business providing equipment for bakeries. He always makes a note of sales and purchases on credit and associated returns, but he is not sure how the transactions should be recorded in the purpose of accounts. So he just makes notes. He doesn't know how to how to record the transaction into the books. So it is your job to do it as an accountant. So first, understand what the transactions occurs. So on the 1st August, Mrs. Bakewell purchases cake tins at a cost of $500. So we, for example, we are Mr. Kipperling, right? So Mrs. Bakewell purchases from us. So she is our customer. So it is a sales, right? It is a sales for us. So we will record it in our sales account as a account receivable, right? So you just need to remember, whenever the on account or on credit word is mentioned in the questions, so the transactions will be recorded into the sales day book, right, or the purchase day book. And if it is on cash, you don't need to record it in the sales day book, because cash transactions are recorded in the cash book, right? Now let's move on to the next transaction. Mr. Kipperling purchases equipment at a cost of $2,000 from Wholesalers Tin Pot Limited. So now the Kipperling, who is the owner, purchases equipment. Now it will be recorded into the purchase day book, right? So it is our liability, right? So it will be recorded here. So now on 2nd August, Mr. Kipperling returns goods costing $150 to another supplier, which is iCook, right? So you just need to put the values in the separate books, like here, as you can see, sales day book, then sales return day book, purchase day book, and purchase return day book. So after all of this, you get the balances, right? And what you will do, you will make entries of sales which are on account, which are on credit, right? And then purchases which are on credit, and then same goes for the sales return and the purchase return day book, right? Now let's move on and understand the cash book. All transactions involving cash at bank are recorded in the cash book. Many businesses have two distinct cash books, a cash payment book and a cash receipt book. A note of cash discount received is also recorded in the cash book. This is to facilitate the recording of discounts in both the journal and accounts payable. It is common for businesses to use a columnar format cash book in order to analyze types of cash payment and receipt. Note that accounting for discounts is considered in more detail in chapter 5, which is return discount and sales tax. Now let's understand the illustration 2, which is the cash book, and it says the following is the cash payments book of a small print business. We have a column of date, then details, then bank, right? Whatever the cash is in our bank account is our cash, right? Now read the requirements. What are the accounting entries arising from the totals in the cash book at the end of the day, assuming the control accounts are kept? So what are the totals in the cash book? These are our total amounts, right, by which we are going to make entries. Now let's understand. Bank, right, as I told you before, bank is our asset, right? It is our current asset. Payables are our liabilities, right? And rent are expenses. Now, whenever the liabilities increases, it shows on the credit side, and whenever it decreases, it shows in the debit side, right? So same goes for this. So I'll write the entries here. Account payable worth 3,210, right? Then we have rent expense. Whenever the expense increases, it shows on the debit side, right? 3,400. Now the payments are made by the bank account, right? So our bank account decreases by 6,610, which is a total of this, both of these. Now let's understand the discounts. So we are getting the discount on our liabilities, right? Which is $180, right? So we are receiving, right? We are receiving a discount. Discount is mentioned as an income, right? So we will debit the accounts payable account, right, with 180, and 180 received as a discount. So discount received, which is $180. These are gonna be our entries, right? You can check with the solution of illustration 2 as well. Now let's move on and see what we have next. This test understanding is for you. You can you can practice it, and it has answers at the end of the chapters. Now let's understand petty cash book. So petty cash book is a book in which small transactions are recorded, right? Whatever your business, small transactions happening on a daily basis, whatever it is, so it will be recorded into the petty cash book, right? So let's read what it's written here. Control over petty cash. The following controls and security over petty cash should be found in a business. The petty cash must be kept in a petty cash box. So there is a box in each business, in each office, company, in which the petty cash amount would be kept, right? So the petty cash box must be secured in a safe. It would be secured in a safe place, and a person is responsible for the petty cash. Must be reliable and know what he or she is doing. So there is a petty cashier in every business who manage all of these tasks, right? And all petty cash must be supported by invoices. Yes, so there is a source document which we know as an invoice, and it supports the petty cash, right? And petty cash is also known as the Imprest system. Sometimes it is mentioned as the Imprest system or top-up system. Right? Then petty cash vouchers must be signed by the claimant and the person responsible for running the petty cash. So there is a regular check to check the cash is accurate in the petty cash book. Now you have to read this passage, right? whatever it says. What points we should keep in our mind: that establishment of petty cash fund, right? Then expenditures of petty cash fund, and the last is reimbursement of petty cash book of petty cash fund, right? Now, as we know that these are our expenses, right? Source documents, right? Whatever the bills are, so you will attach those bills and or vouchers into that book, and then you will put the stamp on that, right? Now let's understand the format of petty cash book. Balance at a start, right? Then you will deduct petty cash vouchers, right? It is like a monthly expenses. For example, transportation, right? Or something else. So it will be deducted as a name, petty cash vouchers. Whatever the total of those voucher will be deducted here. So the deduction will be used as a bracket. Then you will deduct IOU, which is the petty cashier has given cash as a loan, right? As an loan, right? Then you will add whatever the receiving from those cash, those loans, right? Now, whatever the answer is, it is your remaining balance. Right? And then you will find what is the reimbursement balance. For example, you have 1000 balance as at the start, and then you have petty cash vouchers of 750, right? IOU will be deducted, for example 150, right? Then IOU received, for example you received 100, right? So whatever the balance is, like 1050, it is 200, right? Remaining balance is 200, right? I'll separate it. Now the company will give you the remaining to reimburse it, right? That is 800. Now it is the reimbursed balance, and now the total will be the balance is restored again. See, right? So it is your balance restored. It is your balance restored, right? I just forget to tell you that is IOU, and IOU is where should I mention? Okay, here of you, right? It means that I give you the amount on credit, right? Now let's continue with the recording of petty cash vouchers. So here is a question for petty cash voucher. Record the following transaction during the week ending December 31st, 2019 with a weekly Imprest $500. So this is the business petty cash details, right? And they have a weekly Imprest system, and they have a limit, they have a balance for each week, and that is $500 for that week. All of the details are here. On the 24th December, the stationery items worth $100, right? So these are these are the items that we have to add these into the petty cash book, because these are small transactions done by the business. They don't need a double entry format. They will be just posted into the petty cash book. As here, as you can see, I have also made the format. There is a receipt column, and in the receipt column we have the Imprest balance at the start, that is $500, right? So we will write it here as a $500. Then on December, whatever the date that is, then there is a particular column which says balance at start, right? And there is no payment, stationery and all that. After that, we have to post all of these vouchers. So at 24th December, we have a stationery voucher which worth is $100. So we will write here on the date column, the date is 24, right? By stationery, right? Simply you just need to write by before each, all of them, and then the payment, which is 100. Now you will write the payment in the stationery column, and others will be a dash. Then on the 25th of December, we have two vouchers, which is bus fare and cartage, right? So bus fare, cartage and the taxi fare are in the same category, which is transportation, and they are recorded in the same category but with different dates and different amounts. So this is all. We need the closing of all the payments, right? So calculate it and get the balance. We get the balance of 412. This is the balance carried down, closing balance. Now on the January 1st 2020, so now we need the balance back. So what we will do, we will take the difference of both of them, which is 98, right? And we will add 98 into this, and then we will get that balance back. So 98 is our reimbursed amount, and this is the balance forward, also called as the opening balance. So it is like that. Or maybe sometimes they will ask what is the balance carried down and all that. So it is like that in the ACCA level. So I hope you understand the petty cash voucher, how to record it, and the top-up system format as well. So if you want to revise it, you can repeat this video and practice it as well. So now, as we understand the petty cash book in very depth, So the journal entries, we already cover it in the previous video, which is the concept of duality, and I will make a separate video for the journal as well in the next coming days. You can revise it, you can revise the whole material in the book, because reading is must. And prepare your own notes. I will suggest you each and every time that make your own notes. It will be very easy to understand each and every topic. Then we already discussed the ledger accounts and the division of the ledgers, right? Debits and credit. And then we have already covered the duality concept. The accounting equation is the thing that I should teach you in this video. So what is the accounting equation? Accounting equation is this, that all the assets, right, all the assets should be equal to the equity and liabilities, and that will be shown into the statement of financial position. Right, which is also known as a balance sheet in the previous time. So there you will see later on that assets should be equal to the equity and the liabilities. So the statement of financial position shows the position of a business at one point in time. A statement of financial position will always satisfy the accounting equation as shown above, right? The accounting equation is simple expression of the fact that at any point in time the assets of the business will be equal to its liabilities plus the equity of the business. So you will just you need to just read all of this material and all that, so it will be very easy for you to to solve the questions. And then you can I will suggest you to not see the answer, to not check the solution. You just first solve it and then check your answers in the solutions, right? Okay, now and then it is just a solution. I think that's all in this chapter. We already covered the ledgers like debits and the credits, and then you can remember this term, that is pearls. Whenever purchases, expenses and assets increase, that shows in the debit side, and whenever the revenues, liabilities and equity increase, that is shown in the credit side. We already covered that topic. So that's all in this chapter. You can revise it, you can read this chapter and practice it well, because this is the basic of the accounting. Thank you, and I'll see you in the next video.